There's real beauty in the Bitcoin price data. Most people think that we are in a 4-year cycle over and over again. It seems like the Bitcoin price development is somewhat predictable. I don't think though that currently we are in a similar situation to 4 years ago. I believe we are in a similar situation to 5 years ago. And that's based on some momentum analysis. Quantifiable momentum analysis. Let me show you what I mean. So here's Bitcoin's price over the long term. And we're going to look at an indicator most people are not looking at. But one step at a time, what we've got over here is the long-term Bitcoin price chart in green on a logarithmic scale. So this goes all the way back when Bitcoin was just worth a few cents, and it encompasses all the bull and bear markets over time. What we also see is a curved line that somewhat approximates where Bitcoin can potentially bottom. And what we've also got is this line here in turquoise. This is the 1 year or 52-week simple moving average. Now, what's so interesting about this moving average? I built an indicator to calculate the relative difference of the price to the moving average. So how much higher or how much lower are we, relatively speaking, to the moving average? So for example, over here in December of 2017, the price was at 20,000 and the moving average was only at 3,600. So we are roughly a 6x above the moving average. And we can also play this the other way around. Here the price is at 3,000 and the 1 year moving average is at 8,000. So we are more than 50% below the moving average. Now when we zoom out, we look at all of Bitcoin's price history and we look at how much is the price above or below that 1 year moving average. We get a very interesting structure. So the first thing we notice is that from one bull run to the next, the price tends to extend less and less versus the moving average. In other words, the bull runs tend to slow down over time. We don't tend to go up as quickly anymore. And that makes intuitive sense because Bitcoin is now way larger in market cap. It takes more and more money to get into crypto in order for Bitcoin to double yet again. And pouring in billions and billions of dollars into an asset class, of course, takes much longer than just a few $1,000s. So that's why those tops are declining, right? We get less and less extended from the moving average. What we also have over here as the first horizontal line is the zero line. So this is simply just another representation of when we actually cross the moving average. So we can test this over here. We're crossing the moving average in March of 2023. And that's also when we are crossing the zero line over here. So that's just a reference point. But what we also see, and let's zoom in again, is that we tend to bottom out at very similar levels, at roughly 55% below that 1 year moving average, right? Isn't that fascinating how close those bottoms are to one another? At 55% below the moving average, we tend to see a floor. We tend to have a very nice buying opportunity. Now, is it reasonable that we are going to see again very soon a drop that leads us all the way to 55% below the 1 year moving average? Let's run the numbers. Currently, the 1 year moving average is at roughly 49,500. If we drop by 55% below that, so we've got 45% left, we are going down to 22,300. So the bearish case would bring us roughly here. Now, is this reasonable? I'm not so sure, right? Historically, if we just take this curved line, we've never come below this. So is it reasonable that we go this low this time? What I personally think is going on is that we simply just lose some steam after a bear market. It seems like we are in a very similar situation to 5 years ago. Because let's compare those last two bear markets. We had a massive crash in 2018 where we went down by more than 80%. And then we had our recent crash from 2021 and 2022 where we went down by 75% roughly. Now the recovery from 2018 was not a straight line. We did not straight go up from 3.5K all the way to above 60K. We did have a nice crash in between as well, where we went below the 52-week moving average. That was the COVID crash, that was the COVID correction, more than 50%. And just based on this chart, we can see that COVID simply just accelerated already bearish momentum. COVID happened over here, but we already went down. We already lost some steam several months before that. Now, would it be that surprising to see a very similar recovery from a very similar bear market yet one more time, right? If you believe that this bear market here is similar to this bear market, then why don't we overlay those recovery charts as well? Maybe we're going to see something very similar to 2019. Maybe we are in a situation like this. Now this seems to make a bit more sense, right? In terms of the worst case scenario. Maybe we don't see 22,000. Maybe if we're really running out of steam, we're turning around at already 35,000 and maybe within the day a bit below that, right? These are end of week tickers, right? When we look within the week, we can see a bit more volatility. And that would not be out of the ordinary. We had seen a recovery, an early recovery before, again during COVID. Because let's look at this one more time. Let's see where the bottoms are. Yes, the absolute bear market bottoms are at minus 55% below the 52-week moving average. But have a look at this. This was the COVID crash. That actually turned around at minus 36%. And so let's work with that turnaround number. At what point would we see a bottom? The answer is 36,000. Very much in line with our long-term support chart as well. So maybe we aren't only seeing how the rallies tend to slow down over time, maybe the bear markets slow down over time as well. And maybe we aren't really in 4-year cycles anymore, but maybe the cycle extends to 5 years and then afterwards to 6 years, to 7 years, right? Maybe the market as a whole is maturing and simply just getting slower because the market caps are rising over time. I personally actually believe this is one of the more likely scenarios. I believe it's totally on the cards that we could see prices below 40K one more time. If you have set up your portfolio in a way that is so risk on that you could not take advantage of a drop below 40K in Bitcoin because you're so heavily into meme coins, and maybe it makes sense to diversify somewhat, right? I personally own all kinds of assets. I also own long-term government bonds. I also own stocks. I also own gold, etc. So when Bitcoin really drops a lot, I'd be able to take advantage of that drop by selling all these other assets that aren't that highly correlated to Bitcoin. Simply just have a look at the past. We don't just go up in a straight line. We do have our correction. You have to be prepared to withstand those corrections or ideally even take advantage of them. And I'd not be surprised if we see a bit of a slowdown going forward as well. We might just go sideways, we might go down, but I don't believe that we are going to go parabolic and we'll be again another 3 or 4x above the 1-year moving average. We are not going to suddenly be at 150 or 200K. The market as a whole is simply just not as quick anymore. I know everybody on YouTube is incentivized to be bullish and to talk prices up. I try to keep it real here. Even though I might be wrong, I simply just share what I see in the data. If you appreciate this, then feel free to give this a like. Feel free to also share this with your friends. And if it's your first time here, of course, feel free to subscribe as well. I publish videos regularly. If you've got Telegram, feel free to join us. The link is down below. Feel free to also check out Premium. This is where I share what kind of trades I do. Looking forward to seeing you in both chats. See you later. Cheers.